Last week in Nigeria, the rescued banks managed to get all the shareholders to approve recapitalization merger deals. We cross now to Abuja to chat to the country's central bank governor, Sanusi Lamido Sanusi, looking at the banking sector, but also putting the spotlight on some of the currency concerns that plague the markets right now as well. Thanks so much, Governor, for joining us on the show this afternoon. Let's perhaps start off with a look on the currency front. We had the central bank selling an unusually high amount of FX last Wednesday. It hit $700 million, and that to meet the elevated demand that we've been seeing for the greenback amidst a gradual depreciation that's come through on the Naira specifically. That sees the central bank exchange rate at the top end of its 146.50 to 154.50 range for the Naira. We've seen the CBN intervene aggressively like this in the past to meet dollars. For how long can the CBN continue to be this aggressive in the market, bearing in mind the impact such a move has on the country's foreign exchange reserves?
Well, Alishia, we've had a difficult 2-3 weeks. There have been great concerns globally over what's happening in the Eurozone. There have been concerns over the prospects of oil prices. We've just had the benchmark announced for 2012 budget with a price of $75 and 2.4 million barrels a day, which suggests that's going to be even expansionary compared to 2011. It is natural with a combination of these factors to see elevated demand. We also have had to hold on for a week or two to see the bank mergers go through. But in the next week or two, we'll be in a position to really take the market without serious concerns about the banking system now that the banks have been resolved. And we do think that there will be a reaction from us starting late this week and early next week.
You've said before that the CBN will announce a change, in that ±3% around the 150 Naira to the dollar target range. Have we reached that point, or is the CBN right now insisting on maintaining that range? Because we were speaking to a market commentator this morning, and he was saying that the question the market has at the moment is, would the bank consider shifting the peg on the unit to perhaps 155, 160, and it's a value there that the market seems to see more realistic?
We've always considered and we've always said that the decision will be based on what we see as the sustainable and long-term prospects. Certainly, if we do continue to see threats to oil price, if we do continue to see threats to the reserve position, and if we think we have exhausted the limits of monetary intervention, we'll have to do that and we'll have to announce. But if there's going to be a depreciation, it's something we want to be in control of, and we want to be the ones that will announce it. At the moment, the pressure is coming from a number of sources. There are questions about security. There are questions about the expansionary fiscal position for 2012. And of course, there are the international issues. The Brazilian real has suffered, the South African rand has suffered, the Kenyan shilling has suffered. Nigeria is not an island. The real question is, how long is this going to happen? Is this going to continue? And what kind of measures are required? In the short term, we think we will take some monetary measures. We'll try to avoid administrative measures, and we'll try to avoid certainly any kind of capital controls. But at the moment, there has been no definite change in foreign exchange rate stability stance.
Of course, that worldwide phenomenon that you've highlighted, specifically with regards to emerging market currencies and the depreciation we've seen in those currencies, has triggered much debate on whether or not intervention is successful in the first place. We had the CBN having used several measures to temper demand for FX at its weekly auctions in the past. How effective have these measures been to control FX demand?
Well, the markets always come up with this analysis that's always based on what happens in the last week. When it works for 2-3 weeks, they say it has worked. If something happens, they say it has not worked. Currency markets react to a number of factors. Nigeria has structural problems. We're an import-dependent economy, for example, so whatever the exchange rate is, there will be no reduction in the demand, say, for petroleum products or for imported food items. We can deal with the demand for dollars that is speculative, but not for demand for goods, because the demand is inelastic. Now, if you've got an expansionary fiscal policy combined with structural bottlenecks, and we just coming out of an accommodative monetary stance, coming out of a banking crisis, you would expect the currency to come under pressure. And the reserves have been used to support the exchange rate. So whatever decision we take has costs. If we insist on preserving the value of the reserves, we've got to either raise interest rates significantly, maybe tinker with the cash reserve requirement, or run down reserves. Otherwise, we can decide to depreciate the currency and risk a possible high inflation and the backlash that comes from a higher cost of imports. It's an economic decision with costs. We have to weigh the costs and benefits of each decision, and then come out with what we think in our best judgment is in the best interest of the economy. The problem with changing an exchange rate stance is that if the present problem turns out to be temporary, then it will be a knee-jerk reaction. Whereas it's easier to reverse interest rate decisions. So we're taking a little while to arrive at that judgment as to what is sustainable and what is not. Because once we move to, say, 155 or 160 or whatever, then we effectively locked in for some time. And it's something that we don't want to do as the primary line of action. But we have always said we will not defend the Naira at all costs.
Absolutely.
We will try to have stability, but we have always said not at all costs.
Well, let's shift focus to the banking arena, Governor. I mean, concerning the rescued banks, we've finally gotten all shareholders to approve recapitalization and merger deals, but there are reports that we've got court orders stopping some of these shareholder meetings, even though, they went ahead. An example of that having been a FinBank. What are your thoughts on the risk that these mergers or deals will not be completed from here on out?
Since this process started, we've had all sorts of threats of court actions. We've never lost a case. The central bank has not done anything that is illegal. We had a court order from the Federal High Court in Lagos to hold a meeting. Then we had, the night before the meeting, an ex parte injunction from the Federal High Court, the same court, not an appeal court, in Abuja, not to have the meeting. And this was an order filed at the instance of a shareholder who was himself indebted to the bank to the tune of about 3 billion naira, now with AMCON, a former senator, politically exposed persons. This is somebody who basically has issues with us, and he procured the order based on misdirecting the court and giving information on a case to which he was not party, a case which had been dismissed. Now, we therefore had two orders from the same court. Two equities had been created. We decided to obey the order that preceded in time and the order that was in the interest of the majority of the shareholders. And 87% of them voted for the deal. And we have filed processes for vacating the injunction. I don't see any problem. I think in the next few days, we're going to get court sanctions for all the decisions at the AGM. In the following week or two, AMCON will issue the bonds to these banks. And as far as I'm concerned, the banks have been fixed and with the crisis behind us. And I feel totally satisfied that we've done this without depositors losing money. I don't have any problems at all. Well,
Governor, we're going to have to leave the conversation there, unfortunately, for this afternoon. But thanks so much for your time. It's certainly an area that we will be focusing on, what the focus of the CBN is going to be when it comes to the banking sector post-crisis and what the new normal for Nigeria's banking sector is going to be. That was Nigeria's Central Bank Governor Sanusi Lamido Sanusi joining us live from Abuja.